A reverse home mortgage can get you cash without you making payments. What is a reverse mortgage? A reverse mortgage is a home loan that allows property owners 62 or older to convert a chunk of their home's equity straight into tax-free income without selling their residence, and here's the best part, without having those pesky month-to-month payments that usually come along with a home loan. In the vast majority of cases, there are no income or credit requirements. However, you need to occupy the residence as your principal home. Homeowners age 62 or more could qualify for a reverse mortgage. Due to the fact that your house pays you rather than you paying for the house, it's called a reverse mortgage. House owners whose homes qualify need no earnings or credit history to obtain one of these loans. As a homeowner, you may acquire around 72% of your property's equity, according to your age, without ever coughing up cash on a monthly basis again. With a reverse mortgage, you will continue to be on title as the legal owners and stay in the residence as long as you want, either until you choose to relocate or sell the home. When the time comes to sell your home or move, you could sell or your heirs can buy the property. Since a reverse mortgage requires no regular payments, the interest on the financing will increase the mortgage balance over time. The longer you remain in the home, the more the interest piles up and increases the mortgage balance. As the value of the home increases over the years, the enlarged mortgage balance does not actually have to be paid until the house owner actually sells the home. Now here's a very interesting and beneficial fact about the reverse mortgage. If the sale of the home fails to pay off the mortgage, neither the homeowner nor their heirs have to pay the difference. This is law. There are lenders out there who have tried to pressure the owners to make up the difference when this has occurred. If this ever happens to you or someone you know, an informed lawyer can make that problem go away very quickly. Also referred to as an HECM, Home Equity Conversion Mortgage, a reverse mortgage is a financial tool that was developed specifically for residents 62 years of age and older to allow them to 1. Pay off their present home loan and also remain living in the residence they are comfortable in and never having to make a monthly home loan payment again. 2. Use the tax-free cash for anything they want. 3. Enable them to affordably remain homeowners. 4. Relieve pressure from their regular monthly expenses so they can breathe easily financially. And 5. Live a far better life in retirement. Unlike standard home or second mortgages, there are presently no credit rating demands to obtain a reverse mortgage. The only demands are that the home has to be your primary home, you be at least 62 years old, and you must have enough equity in your home. Reverse home mortgages explained. Why are these home mortgages referred to as reverse mortgages? A reverse mortgage operates in a reverse fashion from a conventional forward mortgage lending arrangement. The ability to transform your equity into revenue is what sets the reverse mortgage apart from other home equity loans, mortgages, or lines of credit. A reverse mortgage is precisely what its name states. With a reverse mortgage, the lending institution bases the quantity of money they will loan you based on the value or equity in your residence, yours and your spouse's age, current loan interest rates, and also the county in which you live. How does a reverse mortgage work? Your existing home loan, if there is anything remaining of it, would be paid out with your newly acquired reverse mortgage, so it will be gone. This means that its corresponding payment will be gone as well. You will have 0 home loan payments. So if you have an existing mortgage, you can actually reduce your monthly payments with a reverse mortgage. Additionally, the remaining balance after the first mortgage is paid off is tax-free and can be used for whatever you want. You can use a reverse mortgage to get access to the equity that you actually worked so hard to create if your property has substantial equity. Despite the fact we are hearing more and more about reverse mortgages, some of the standard facts are typically misunderstood. Let's start with a couple of simple ones. Common questions regarding reverse mortgages. Exactly what is a reverse mortgage? A reverse mortgage is a special kind of home loan that allows you to convert a part of the equity in your home into cash. Borrowers do not need to pay off the mortgage until they no longer live in the house or cannot fulfill the legal requirements of the home loan. Can I get approved for a reverse mortgage? To be qualified, you should be a homeowner 62 years of age or older. You have to likewise own your house outright or have equity readily available in it. You need to also live in your residence as your primary residence. Exactly what sorts of houses are eligible? To be qualified, your home needs to be a single-family dwelling. HUD-approved condos and manufactured homes that are in line with FHA requirements are also eligible. Exactly what are the differences between a reverse mortgage and other home equity lending products? With a home loan or equity line of credit, borrowers must have appropriate earnings and a decent credit rating to be approved for the financing, and they have to make month-to-month repayments on the principal and interest. A reverse mortgage is uniquely different because it pays you. There are no month-to-month principal and interest payments. With a reverse mortgage, it is still necessary to pay regular real estate expenses such as taxes, utilities, and hazard and flood insurance coverage as well. Will we have an estate that we can delegate or pass on to our heirs? When the house is sold or no longer used as a key residence, the money, interest, as well as the finance fees have to be paid back. However, all remaining equity past the quantity owed belongs to your spouse or estate. Any remaining equity is passed along to the estate or heirs. How much cash can I obtain from my residence? The quantity you might obtain will depend on the age of the youngest borrower, the appraised value of the home, and current loan interest rates. Exactly what is this reverse mortgage counseling I hear about, and why is it required? Reverse mortgage counseling is handled by a third party who is authorized by the United States Department of Housing and Urban Development. The counselor sees to it you comprehend the reverse mortgage program and will cover various other financial options available to you. You needn't fret about locating a counselor either. They are readily available. HUD requires all potential borrowers to attend this counseling. This very quick and easy to understand counseling guarantees that you will know all your alternatives before you begin the reverse mortgage process. An increasing number of property owners are remaining in their homes while making use of a reverse mortgage to supplement their retirement earnings, pay for health care costs, make residential repairs, or establish a line of credit for emergency situations, or even to simply go on a holiday. Simply put, it's about lifestyle in your golden years. Turning your residence into your pension plan is your reward for saving as well as paying down your home mortgage, as opposed to burying yourself in debt. You've worked hard, investing time and money into your home throughout the years. It's time your house pays you back, isn't it?